Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Euro-dollar. An indecisive spinning top yesterday and bullish harami, if only just, after the previous session's combined bearish harami and bearish opening black Mariposa. The action was capped topside by, of all things, the bright red neckline, bright pink neckline extension, I should say, currently at 119.96 of the April to May 2020 reverse head and shoulders bottom. Whilst the downside, that's actually not a very big pattern, but it did that. Whilst the downside still had room below, down to the congestion between the June 2018 high at 118.51 and the June 25 high at 118.29. The action remains within the bright red, shallow July 25 to date bull channel, which is currently 115.87 to 120.65, though we are set up to make a monthly key reversal up for January. So far today, well, a test lower, but halting at that 119 even level for now. Cable, AK sterling against the US dollar. A somewhat long-legged indecisive doji cross yesterday after the previous session's bearish opening black Mariposa and bearish harami combination. We're within a congestion zone between about the June 2025 high at 137.87 up to at least the October 2021 high, and possibly as high as the September 21 high, which is at 139.13. Now, prices have broken higher out of the dark blue late June to late January dark blue bear channel, with potential as far as the March 2018 high at 142.43. But it seems the market is very reluctant right now to try up that far. Meanwhile below, we have little apart from, and I suppose, the June 25 high at 137.87 and the September 25 high at 137.27, until the dense and wide congestion band between 136.21 to 136.43 and 134.83 to 135.81. So I'm wondering if we will drop down to those levels. So far today, an attempt low, but so far the market has found it difficult to really motivate itself to try that much further down. US dollar against the Japanese yen. A counter to the counter bearish harami after the previous session's immediate countering bullish opening white Mariposa and bullish harami. It was a somewhat reactionary move yesterday, as the market seems for now to be capped by the overhead mauve medium moving average, currently 154.03, and held up by the combined congestion of the October 22 high at 151.94 and the November 23 high at 151.92, plus the August 1990 high at 151.93. Overall, we're back within the previously breached bright red upper bull channel line, currently at that's the bull channels between 150.58 up to the upper channel line at 150.743, though I'm beginning to wonder if we might have the start of a slightly sharper, more acute bull channel, and that's actually between about 152.27 to 160 even. More on this should it develop. In the bigger picture, we are also set up to have a monthly key reversal down here for January. Now, so far today, a seeming reactionary bullish engulfing pattern that is now taking on the overhead mauve medium moving average. Beyond this, we have a weekend gap from last week between 155.34 to 155.62, plus the old June 1990 high at 155.78, which is in the center of congestion seen in December last year. US dollar against the CNH, the offshore Chinese yuan. An indecisive doji cross yesterday after the previous session's immediate countering bullish piercing line pattern and bullish opening white Mariposa. Prices opened and closed just about right on the previously breached bright green upper bull channel line, which is currently at 693.82. I'm thinking that we might have a shallower, more recent late December 25 to date bear channel, which is currently at 693.25 to 696.88, rather than the bright green early December 25 to date bear channel. So perhaps a tempering of the bearish incentive somewhat. More on this should it develop. The key on the downside remains the bright red extension to the upper trend line, which is currently at 693.04, the May to August 2022 ascending triangle. Meanwhile, on top, look to the September 2024 low at 696.90. So far today, a move higher, but we're within yesterday's range still, so not too far as yet. US dollar against the Brazilian real. A long-legged outside day that was also an indecisive spinning top yesterday. And that's after the previous session's indecisive spinning top pattern as well. And that actually was also a bullish harami. So we're in a fairly dead zone between the overhead congestion of 524.07 up to 527 even, and below the support with a significant 50% Fibonacci line below of the October 2019 to December 2024 move of 513.82. Overall, the market is still in between the declining dark blue middle time above, which is currently at 526.02, and the dark blue lower time below, currently at 500.11, and that's of the mid-December 24 to mid-April 25 bearish shift pitchfork. This continues to be the showrunner for this market. US dollar against the Mexican peso. A somewhat long-legged indecisive spinning top yesterday after the previous session's immediate countering bullish thrusting pattern and bullish opening white Mariboso. The base of action yesterday, as it has been for the last three sessions, has been the March 2016 low at 1709.23, whilst the top side was capped by the breached dark blue lower bear channel line, currently at 1736.24. This bear channel has been the showrunner here since mid-November last year. Now further up is the July 2017 low at 1743.74, and then the narrow congestion band, which is 1756.93 to 1759.58. So far today, well, a further attempt higher, testing the breached dark blue lower bear channel line. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.